We thank our sponsors very, very much. You can see them basically everywhere, I hope. And we will begin soon with our first speaker, Bradley Duke from ETC Group. He will talk to us about how crypto assets changed the financial industries. And I'd like to welcome him on stage right now. Bradley Duke, everyone.
Okay, good morning. My name is Bradley Duke from ETC Group. ETC Group is an issuer of digital asset-backed securities, and we're based in Germany. We're a German issuer, BaFin approved, So this topic, how digital assets change the financial industry, is a very broad topic. We can, and often where you approach this depends on, where you live, what your situation is. Here in Europe and in the US and in other developed markets, we see digital assets and crypto as a new asset class, another place to diversify your portfolio. But if you're living in, for example, Venezuela, it's a different lens. You're seeing the world through a different lens, and there, crypto is very much it's a lifesaver for you, or it's an enabler. It allows you to continue to do business, to buy and sell goods and services, because of what it is. It's an incredibly disruptive technology. It's financial services, really. People say be your own bank. With crypto, and that's pretty much what it is. It exists wherever the internet exists. That's just a slide about me looking a little bit thinner. So there's a lot of big questions about. By the way, these slides will be available after. I'm going to skip through quite a few slides because there's a lot, and I've only got half an hour to talk. These slides, this whole slide deck, will be available to download after the conference. So there's a lot of, as I mentioned, Bitcoin is a disruptive technology. And that's the sort of the grandfather of crypto. And there's a lot of questions that people ask, about. Is it here to stay? Is this a phenomenon? This is really a once-in-a-generation phenomenon that we're seeing, people are wondering: is this a flash in the pan, or is it going to be here to stay? Is demand for cryptocurrencies from institutional investors still increasing? And I've got a bit to say about that. And are cryptocurrencies able to compete with gold as a safe haven asset? So these are just some of the questions that I'll be covering today. I just want to start by saying that we are in the very, very early stages of digital assets rolling out, the technology being accepted, and people starting to understand what Bitcoin, Ethereum, and other cryptocurrencies actually mean in terms of treating them as part of an investment portfolio. And there's a lot has been said about institutional adoption of cryptocurrencies as part of their investment portfolio, but the reality is that actually very few institutions have invested. There's a lot. When there's a large or well-known institution that does make an investment or does begin to hold crypto as part of their portfolio, there's news stories about it. But the reality is it's still really very much in its infancy. There are a lot of the largest institutions, the pension funds, the real money managers, are by their very nature slow-moving organizations. They're very conservative. They're going to wait and watch and not be the ones to be the first mover or to be the early mover. So I think what we've seen since the inception of crypto, we have seen some institutional inflows, but it's been mostly a retail-driven phenomenon and continues to be so. But now we're starting to see, especially over the last year, a change, a real shift, and I'll discuss more about that. You can read. We produce, and everyone here can sign up for free at ETC Group's a website for our research. We produce a lot of research on on single coins and trends and what's happening in the crypto industry in general, and also on any thematic ETFs that we produce. So please, I encourage you to sign up. But what we've seen this last year is we've seen a big shift in terms of the mining of Bitcoin. Since China actually banned the mining of Bitcoin, there's been a big shift. I'll talk more about that on the next slide. There is an uptick in adoption of Bitcoin, in particular by institutions. And then I can talk a little bit about how Bitcoin fits into the macro story. Investment banks are also increasingly bullish on Bitcoin. So here's a slide. Really, it's just about what happened where in just a couple of years ago in 2019, China was responsible for 75% of Bitcoin mining, and then in 2021, zero. There was a big shift. Most of that was soaked up by the United States. And as you know, Bitcoin mining is a very profitable. It's part of the consensus mechanism of this proof of work blockchain. Very important part, a very essential part of the smooth running of the Bitcoin protocol and blockchain. But there's been a shift in terms of where that's actually taking place and who's actually doing well from benefiting from the good revenues that you make from Bitcoin mining, in particular when the Bitcoin price is up. And we recently went through kind of over Christmas, over December and January, we went through quite a period where the price of Bitcoin and the other altcoins followed, where it was a dip. But and for a lot of institutions, they saw this as a buying opportunity, and we see really large inflows coming in at a time where it seems like the interest in crypto was was waning, but that wasn't the case at all. And yes, Bitcoin it remains the anchor of the digital assets. I've got quite a lot of slides here, so I'm going to move through them quite quickly. So in the time that we've got. So it's interesting. At the moment, we see for the first time we see the U.S. Policymakers starting to warm up to Bitcoin. Everyone's been watching the SEC and their stance, and then on Bitcoin, which has been quite bearish. We had an ETF that came through in America, the first Bitcoin ETF, but no one, I don't think there's anybody who thinks it's a well-structured ETF, and that's no that's no knock on any of the issuers, but it's just in the fact that by forcing it to be a futures-based product, it doesn't track the underlying particularly well. There's a lot of carrying costs that can accumulate to 9-10% per annum. So it's just not a good investment product in the end. But we did see the Biden signing an executive order which really sort of consolidates the position of crypto, and this is unlikely that there's going to be negative regulation towards crypto, at least in the US. Of course, here in Europe, we have, it's a mishmash of countries and regulators, but here in Germany, we're very lucky to have a regulator that's progressive. It's looking forward, probably one of the most progressive in Europe, having enacted quite a few changes and policies, looking for a sensible way to include this new asset class, this new emerging technology into financial services in a sensible way. In other regions, there's been less, not as sensible tech, but regulation activity. I'd say Germany and Switzerland are the two leaders in Europe at the moment. Sweden as well has also got a very positive, forward-looking approach. But also, the Bitcoin's layer 2 Lightning network has been going through many updates and upgrades, and that's driving adoption because it's always been a store of value in people's eyes. But it's the Lightning network enables Bitcoin to be used more for payments as well. And then the reemergence of inflation concerns is also driving the interest in Bitcoin. There hasn't been any hard evidence to suggest that Bitcoin is a good hedge against inflation. That's just simply because it's still early days, and actually inflation is quite new to us now. After a period of almost 40 years of low inflation, we're starting to see it come in now strongly in all the major economies around the world. And that has a lot to do with, I think, the expansion of money supply during the global pandemic, where governments had no choice but to fund stimulus packages to keep the economy from actually collapsing. So these were needed, but the money supply was expanded at a rate which we've never seen before. So this is really new times for economists, and everyone's keeping a close eye on this. But there's a strong feeling, because Bitcoin is such a hard currency, that it will be a good hedge against inflation. And it makes sense to assign a portion of the portfolio to Bitcoin and perhaps other cryptos as well. Investment banks, very bullish on Bitcoin, but not only on Bitcoin and crypto in general. They all, at some point now, opened a desk or started some sort of operation or trading or structured products, or you name it. This is really, the theme of this talk is about how digital assets are changing financial services. This is a big shift now. This is really, we haven't seen anything like this shifting in financial services for a very, very long time. And even the most conservative asset managers, Bridgewater Associates, for example, Ray Dalio said that allocating 2% of your portfolio to Bitcoin is reasonable. So we're even hearing from really these massive, very, very conservative funds beginning to speak, make the right sounds about crypto in general, and an allocation towards Bitcoin as part of a portfolio. In the US, some of the large funds and pension funds have started. Well, this is US North America, Houston Firefighters Relief Fund announced that they were making a large allocation towards Bitcoin, and so did CDPQ, which is the 12th largest public pension fund in the world. I believe that's up in Canada and Quebec. Yeah, so this slide, I'm not going to talk too much about it. It's really about gold and how increasingly Bitcoin is seen as a safe haven asset, and there's increasing allocation towards crypto, and there's really a competition now between what's happening in gold and with allocations towards gold and crypto. And also, Bitcoin is starting to have a larger function in companies in terms of its role in treasury. So there's a lot of major corporations are holding Bitcoin, and even KPMG became the first Big Four accounting firm to buy Bitcoin and Ether as well as part of their corporate treasury. I see ETC Group is on that list there as well. MicroStrategy now, we all know that MicroStrategy was kind of one of the early movers in terms of really getting large exposure to Bitcoin, but they've really upped the ante. They've doubled down on their investment, and even with taking a loan to buy more Bitcoin. And I think actually it's quite interesting what Michael Saylor, the CEO of MicroStrategy, had to say. He said, yeah, people buy Bitcoin because they want to buy an asset. They understand that it might have value in 100 years. The truth is there are no security trading on the NASDAQ or New York Stock Exchange that you can understand 100 years from now. And that's quite an interesting thing. Once you understand Bitcoin, how it works, it's set forever. There will never be more than 21 million coins. Its deflation is the number of coins being issued. Everything's laid out. It's a formal program that's being run, and so we will certainly be able to understand it now, and in 10 years, and in 100 years. So Goldman Sachs did a survey recently, and there was across 172 institutional clients in the US, and they definitely found that the bullish trend is continuing. That people are expecting to add to increase their digital assets holdings, and there's some interesting statistics on this slide. Now, just to kind of put into context where we are in digital assets, I haven't looked at the very latest, but it's about between 1.5 and 2 trillion is the total market cap for all digital assets right now. And if you look at the global investments in bonds to see the market size of that, if only 2% of that part was invested in digital assets, it would double the current digital assets market cap. So you can see that really it is still early days, and this is bonds, right? And if you start to look at equities, it's another entire story. But it is still small, and this is actually one of the things that is keeping out a lot of the largest institutions. They've got rules, they've got investment committees that allow them to only make up a certain portion of any target investment, and this is certainly for the smaller market cap coins. That's what's keeping them out right now. Really, Bitcoin and Ethereum are the only names on the agenda of a lot of the institutional players. This will change over time, but yeah, I've just been told there's 5 more minutes, so I'm just going to rattle through the next few slides. Yeah, and this is quite an interesting one. So this is how, really speaking to the point, and how crypto and digital assets are changing financial services. Today, the trading and clearing fees for crypto exchanges actually bring in more revenue than for traditional exchanges, and this is for the first time in 2021. And this kind of just shows you how there's a kind of a guard change. There's a shift that's happening in financial services, and certainly I know a lot of people. I've been in financial services my whole career, and I've seen how many people who worked in traditional finance have now shipped over to crypto because they see the opportunity there. They see the shift happening. That's just another chart showing the constituents. Binance by far and away the largest of the exchanges by revenue. And then also just in terms of blockchain technology, there's a really, I think one of the best use cases is real-time trading, clearing, and settlement. So this is something that we've talked about, but imagined. We're all so used to this, T+2 settlement cycles. But if you take that away and you actually find a secure way of including a smart contract and incorporating all the aspects of the delivery of securities versus payment in that single smart contract, you can remove a huge amount of risk from the marketplace. You remove the need for this +2 or even having a CCP. A little bit about Ethereum. I'm going to skip over that, but the costs of gas, that's another whole separate discussion. Yeah, and then there's a lot has been spoken about in these past years about the consumption of energy related to Bitcoin mining, and also there's quite a range of between the proof of stake coins in terms of how energy efficient they are, and it's quite an interesting table if you get the time to look at that. As I mentioned, the ETC group does a lot of research. There's certainly a paper on Ethereum and on most of the products that we offer. And a little bit about us and our company. We offer exchange-traded products. We were the world's first centrally cleared crypto product, Bitcoin ETN, but also the first CCP centrally cleared crypto product anywhere, and that was on Zitra here in Frankfurt. Yeah, we offer products. I think today, there's 13 asset-backed currencies that we offer ETPs on, and on multiple of exchanges. And on Friday last week, that picture's really fresh, we launched Europe's first metaverse ETF. So this is now a equities ETF on the London Stock Exchange. It's cross-listing here on Deutsche Börse as well, on Xetra. And we also have a blockchain ETF for those who cannot invest in ETPs or in crypto directly. It has a 70% correlation to the price of Bitcoin. And the metaverse invests in a basket of companies that are producing hardware or software or involved in NFTs and payments, or the social aspects of the metaverse, which is I think Goldman Sachs said it was an $11 trillion opportunity globally. So that's interesting times. We'll see what happens there. Just a slide quickly to finish off around why ETC products are interesting. The one thing I would like to mention is that if you are going to make an investment in an ETP, Bitcoin ETP or crypto ETP, it's worthwhile taking the time to read the small print, get to know the product, because the products are really vary heavily in quality, in how well they actually track the underlying, how secure what kind of risk you have. Some cases your risk is unknowable when the underlying assets are being lent out. And so I think it's really worth everyone's while to do a little bit of homework, and also do a homework on the underlyings. Each of these cryptos, I don't have enough time to go even begin on this, but are very different in their approach, in the investment case, and the technology being used. So thank you very much, and welcome to this conference, and thank you to the Frankfurt School for hosting. Thank you.